Welcome, everybody, for another great podcast here from Brad Brewer with Eagle Homes, powered by EXP, along with a couple other gentlemen here. I'll let them introduce themselves.
Adam Zeman with AZ Mortgage Team. Good morning.
And then Vince, if
Yeah,
he
I'm
wants
Vince
to
Duvall
introduce
with Eagle
himself.
Homes. Hey, good morning, guys.
Awesome. So today we are going to be talking about a couple.
Can you guys hear me okay?
We can hear you.
Yeah.
No. So for everybody out there, just so you
Okay,
know,
thanks.
we are in 3 different locations today, and well, Adam's not remote, but Vince and I are both remote today. So hopefully our technical difficulties will stay at a minimum. So we have 2 topics today to discuss. On the lender side, Adam, what are you going to be talking about today?
So we're going to talk about what it takes to document a loan, like what sort of documents we need, what needs to be in them, and the different documents for different scenarios. So
Okay. And then on the real estate side of the house, we're actually going to go on to the seller side today on what it takes, what goes into pricing a home for sale. What does realtors look at, and taking a look how to price your home to make sure we get a good sale for you. We've kind of been on the loan stuff here with qualification stuff like that. Ad, if you don't mind, why don't we start with your side of the house here today on your topic?
yeah. So I'll just kind of start with, not every loan is the same and not every program is the same as far as what documentation we need to do a mortgage. So I'm just going to kind of do like the broad strokes on what you always need. And I'll start by saying the easiest mortgage and the mortgage that needs the least documentation is just going to be someone that's worked at the same place for over 2 years. They have the money already in their account. Typically that in that situation, you're just getting maybe a pay stub or 2 and maybe a W-2 from the previous year and a bank statement or 2. So that's kind of like the minimum. Now, when you start, when people have changed jobs, or they've had stuff in their past, whether it be maybe a foreclosure or a bankruptcy or whatever that might be, that's where we need those documents to show what has happened in their life and to sort of document it through. Divorce, if you have child support, we need the divorce decree, marital settlement agreement. A lot of times that seems to be difficult. People, if it's a long time ago, that can be difficult to track down. So essentially, the more stuff that is in an application, the more we're going to document. Okay, so I don't want to go too far into detail on that because that's just specific to an individual on what their life looks like. But let's just talk about the basics. So for a W-2, it needs to be like a W-2 that came from the employer, that has all the year-to-date income, breaks down their income, like as far as the taxes go. Basically a standard W-2 that you would receive from an employer. That's usually pretty easy. Now I think pay stubs can be, I don't want to say difficult for people, but when you go on your phone or like whatever sort of software that your company uses, like Paycom or whatever that might look like, usually there's 2 different ways for the pay stubs to come up. Like a lot of times it's just like a blurb, like a quick blurb, and people have a tendency to send me that blurb in like a screenshot. First of all, screenshots typically don't work. You want to save it. There's the easy way on a phone, an Android or an iPhone, to save it and send it as like an actual PDF. But you don't want the little blurb. You want an actual pay stub, and it's really easy to get through most of these payroll companies that your company uses. That's going to have your year-to-date income. That's really important. It's going to tell us if there's any like garnishments because of stuff you may have owed in the past, or if you're paying child support or alimony. That's going to tell us all that on there. So your pay stub is going to tell us a lot about what's happening. So we're obviously going to match your pay stub up with what's your, how many hours you've worked, or let's just say it's, it's August. So we're going to do the math and figure out where that year-to-date income should be. If there's a big variance, then that's, obviously the question that we're going to ask. Why is there a difference with your year-to-date income? Maybe you were sick for a month or whatever. It's just, might need us to explain the situation. So pay stub, W-2 are matching what your income is. Okay. Sometimes, depending on the person, and not to go too far into detail, we can run what's called the work number, and sometimes we can negate even getting those things. And the work number is a verification of employment that tells us like everything that a pay stub and a W-2 would tell us. Not every company's on the work number, and not every loan allows us to use just that work number to verify their income. So basically, you've been working there for more than a couple of years, your conventional loan, you have a good credit score, it's a good chance that we're going to be able to just use that work number to verify your income. You can see how it's like really like a case-by-case basis on everybody and how we document things. Now let's go into bank statements. This is something that by far has always been the most difficult part, or one of the most difficult parts for a loan for people. And the reason is very simple things that most people don't think about and you would never know. So for instance, if it says 1 of 5, we need all 5 pages, even if the last page is blank. Okay. Sounds so stupid, but that's just the way it is, because that's a complete statement. Okay. It says 1 of 5, we need all 5 pages. So that has a tendency to catch people up sometimes. If it's a quick printout, it needs to be put together a certain way. It needs to have like the URL on the bottom of it for the bank, or you can literally walk into a bank and get a bank stamp on a quick printout, a transaction history. But for a regular bank statement, it's going to have everything. I always say like the ones that used to mail to us, because most people don't get mailed bank statements, but it's going to have your average deposit. It's going to have if you had any NSFs, which is overdraft fees. It's going to have the money that you have in there for the down payments. And what trips people up the most is probably, like I said, getting the transaction history. And you can't have large deposits in your accounts. It has to be money that's been in there already. It's coming through payroll, tax return. You can get gifted funds, and you can get funds in different ways, but it needs to be structured properly. So for an FHA loan, you can have more than 1% of the purchase price. Okay, if it's more than that, then that would be a large deposit. So if it's $200,000 purchase price, you can't have more than 1% is a large deposit, $2,000. Conventionally, it's I believe it's 0.5% of your yearly wage. So it's a little bit more for most people. Those are kind of like the hard, fast rules. So when we gather up your documents, we're going to look at your income. We're going to make sure it all matches with all the stuff that we pull, the verification of employments, the W-2s, the year to date. We're going to make sure it has all the things like, your pay stub needs to have the name of the employer along with your W-2. These things can't be cut off. They need to be, it can't be cut off, so I can't read half of it. And then back to the bank statement, typically 1 or 2 bank statements that need to be set up properly without no large deposits in them. So those are always the things that we pretty basically always need, at least a pay stub and a W-2 for the most part, and a bank statement, 1 or 2 to do a loan. So those are like the always. Again, where it gets a lot more complicated and convoluted is when we're documenting other life things for people, which would be like foreclosures, bankruptcies, so on and so forth.
Great explanation. I have a couple questions and opportunity for some clarification on 2 things. You had mentioned, of course, and I know we've talked about this in some of the first-time home buyer webinars that we've hosted, about the large deposits. What you've said in the past is just make sure you document. Also, some of the things you cover, which I think is a good time to mention during documentation, is what are some of the things that you should not do when you're in the process of trying to get a home loan?
So I typically send out a list for everybody, and on top of that list is always do not deposit large amounts of money. I say don't take out any new credit cards. Don't pay anything off before talking to me. Don't take out new credit without talking to me. Don't do anything different in your life without having a conversation with me. Is simple as you might think it is in your head, it might be a bigger deal in mortgage world because of the rules that are put on us. So essentially keep your situation the same as it was when we did the application is probably the long and short of what you should do. What people get caught up on the most is taking out new credit, large deposits on bank statements, and those are probably the two most popular things people get popped on. But again, just have a conversation. You know, I know how to structure things.
And the last probably one thing I would mention is, and I've had this happen, do not quit your job.
Oh yeah, that's a big one. That's an obvious big one that I didn't mention.
Even if you have a new job,
Yeah.
I had this happen. It did not hurt the loan, but it delayed the loan, and it could have deterred or unfortunately canceled out the deal. So if you're planning a job change, talk to your lender.
Yes, that's an obvious one. I'm sorry to bring that up, but yes, keep your employment and or figure out a situation, because if you plan on changing jobs, you might just need to say, hey man, don't look for a house for a week or two. That's all it's going to take. It's
Right.
usually not a big deal, but you can't do it in the middle of a transaction or you're going to have delayed closing.
Exactly.
Adam, quick question here. Hopefully you guys can hear me okay. I've been having some technical difficulties. What about, you said no large deposits. What about borrowing against your 401k? Obviously, a lot of times if you're a first-time home buyer, you can borrow against a 401k. I believe, correct me if I'm wrong.
Yeah.
I've seen that in my past. That could end up being a large deposit. How could that affect a potential buyer?
So that's just a conversation I have up front as to where the money is going to come from for the down payment. And that's a game plan we have. And I tell them, that's fine. It just needs to be documented that it came from your 401k, and there's a couple different documents to get. And then we just match that with the deposit. So that's a very acceptable way of doing things. Just think of this. If it's a large deposit, it just needs to be documented. You can sell a truck, okay? You just need a bill of sale, and I need to make sure that Kelley Blue Book kind of matches what the truck is. It can't be, you can't have a truck from the 60s and you're selling it for $40,000 when it's worth $10. That's a kind of a red flag. But I've had people in the past sell like snowmobiles and trucks, and it just comes down to like a bill of sale, and then we just need to kind of get a good idea of what that is worth to make sure it matches up. So you can have large deposits. You just can't put a lot of cash in your account. That's the big thing. Cash does not work. And if you're going to do so, have a conversation with myself, and I'll tell you, just put it in there maybe 2 months before you're going to purchase a home. If that's what you have to do, or we'll figure out a way to get that done for you one way or another.
So the key I keep hearing is documentation.
Yes.
If we, thinking of first-time home buyers that might have toys such as snowmobiles, four-wheelers, being here in Wisconsin, if they're going to sell them to get their down payment, then they just need to make sure they're documenting it correctly and selling it for fair market value.
Exactly. Key. That's it. Just again, have the communication. Just talk to me, and I'll literally send you the forms that you need to do to make sure that you're documented properly. Is at the end of the day, I want to make this as easy as possible for these people. And obviously people don't do mortgages all the time like I do. And it's pretty easy for me to just structure it so you're doing all the right things.
Wonderful.
Perfect.
Thanks, Adam.
Yeah.
So I believe, go ahead, Brad.
Yeah. So our other topic for today is, so when you go to sell a home, you have us realtors come over, and first thing you do, or one of the steps that we do, is do a market analysis in your home to get an idea of where about we think the market value is in your home, so about where it should sell. So there are some common, and then there are some lesser common, or depending on where you live, that determines how we price your home. The very basics that are pretty common with everything is we look at sold comparables to hopefully similar homes in your area. I know appraisers like to stay within a half mile if possible. If you're in a more rural area, that's not possible. Look at the size of the home, bedrooms, number of bathrooms, and things like that. Probably actually should have mentioned first and foremost, of course, location, the rule of real estate. Homes just in various states, various neighborhoods, various parts of the country can definitely vary as far as their values. Homes, a 2,000 square foot home in Wisconsin is going to be probably a lot less money than a 2,000 square foot home in California somewhere. So location is a huge part as well. I hear a lot of stuff about, people ask about price per square foot. Price per square foot is definitely something we look at, but it's a lot more common when you live in more urban areas where you've got vertical housing, condominiums, stuff like that, because you've got very, very, very similar, units with similar features, size, bedrooms, all that. So the measure of price per square foot can definitely come into play. When we're in more rural areas like where we live in Wisconsin, there's so many other factors that go beyond that I'm going to touch on here that are probably less common from your standard neighborhood or condominium or things like that. Some more things, of course, are condition of the home. Was it updated in the last since 1980, 90, or has it been updated in the last 10 years? That definitely plays a factor. Also, in regards to condition, is just, are things in good working order? I've sold homes that kitchens were last updated in 1989, but yet they're in immaculate condition. Everything works great, super clean. Those do impact pricing of your home. And then the other thing that's probably common is acreage. So like I said, you get outside that square footage is, a same size home, but one's on a 1/4 acre subdivision lot versus a 3-acre lot is going to make a big difference there. And the last couple things that are probably a little bit less common are, additional structures and the type of structure. Is it an outbuilding? Is it a mother-in-law suite, pool house, things like that? And then of course, style. If you're selling a home that's very common and popular, 3-bedroom to 2.5 bath ranch in Wisconsin is very popular. Bi-levels, tri-levels, multi-levels, and stuff like that are less common. Depending on the popularity of those types of homes, townhomes in certain areas can make a big difference. So those are some of the common and uncommon things that you'll find in regards to pricing your home. At the end of the day, what we really have to pay attention to, of course, is the market conditions. Is the inventory levels lower, which usually drives something into a seller's market, or do we have more inventory, which we're starting to see a little bit of a shift now in Wisconsin, where there's some additional inventory, homes are sitting a little bit longer. That does also impact your pricing. So those are some of the steps that are most common and a little less common things in pricing home.
Hey, Brad, quick question. What is probably one of your biggest challenges when working with a seller or presenting a seller a price of their home, and I don't want to say convincing them what the data you're giving them, but what's your biggest challenge or obstacle you have to overcome with sellers a lot of times?
Well, there's a graph that I saw on Facebook last week that summarizes is how a seller envisions their home versus how the market's going to envision their home. And it was a graph that showed like this 3-bedroom, 2-bath ranch style home that I mentioned previously. It was in this graph, and it enlarged it from the seller's point of view. It made it look bigger and it looked amazing, whereas a buyer's looking at it differently. So we all typically will love our homes, and that's usually I have to talk about with sellers is, okay, I understand how much you love your home. That's the reason you bought it. but we have to look at it from the eyes of the buyer. And that's when staging and stuff like that could come into play. And that could be a whole nother call, you know, a whole nother session on, you know, what are the proper ways to stage? What are the good techniques of staging? But to answer your question very and simply is, sellers look at their homes different than the buyers going to look at it.
So it's kind of overcoming that personal emotion, right? Like as a seller, we are attached and we have memories to that home that we as agents have to kind of find a way to recognize and accept and acknowledge. But at the end of the day, it's taking that emotion out and saying, what is the market willing to pay for your house today? Right? We have to convince them of that.
Yes. And that is ultimately what us agents' job is to do, is to kind of walk sellers through it, understanding how we have to remove some of the emotions. And then the other thing is, you know, what I do like to do is I like to give 3 pricing strategies, not to go too far into the weeds here, but, you know, to say, because there's different strategies to get that ideal sale price for you. It's like, do you want to push the market? Do we want to put it on the market right about where it should be? Or do we actually want to come in a little bit low to maybe draw in more buyers and get those multiple offer situations? There's positives and negatives to those. Again, we'll probably have to have a whole future session on strategies around pricing, but it's removing the emotion is a great comment there.
Yeah.
How do you, I got a quick question here, is like someone that just does mortgages. So I think from the past 2 years, it was pretty crazy. And let's just say I come to you guys and I'm like, I want to sell my house. And I'm like, hey, like, let's, you know, I think it's worth $400,000 and I expect to get 5 offers that are $30,000 over asking. And are people still having those conversations? Is that still happening? Do people come to you with that? And if so, how do we bring that down to like realistic, knowing that like it's real estate and it changes and we're changing right now, and many times it changes in like a day. So how do you have that conversation, and is that still a problem? And how do you talk about that with the seller?
Well, certainly if you're going to get $30,000 over your number, it's not a problem. But
right.
The problem is when you don't think you can, or it's not realistic.
Right.
That's the problem conversation, right? It depends right now. The shift we're seeing right now is there's certain price. I'll speaking from Wisconsin specifically, and I've talked to some other agents across the country as far as their markets. We seem to be in a little bit of a shifting of price point. It seems like the higher price homes in our area, like the 750 and above, there's still a good quality buyers. It seems like there's some competition there. And then you've got that mid range, you know, probably from 350, 400 up to about that 750 mark. Those are the ones that seem to be sitting around a little bit more. I don't know if interest rate changes have shifted it. Just more of those homes have come to the market. So there's less competition there. So those homes right now, I would not want to set the expectation to this over ask number.
Mm-hmm.
It's certainly possible, but you know, I'm going to try and set the expectation of under promise and over deliver, hopefully.
Right.
But I am in tune to what the market is. Now, you're 250, maybe even 300 under, that inventory to me is still pretty low. Again, but you have to be careful of where your location is, even in Wisconsin. Like there's some pretty good inventory. I just helped a buyer get under contract in a home in those price point, the lower side price points in Racine area lately. There's a pretty good amount of inventory. We did not get into a multiple offer situation, but yet, you know, I've had several a little bit more Western Racine County that have gotten to those. So it can really play out and actually, but go back to the Racine sample, you know, recently I've helped another buyer and there was a multiple offer situation. So it's really a shifting market. And as we're having this conversation, things can change. So it's really important right now as an agent that we stay really in tune to the market. I know Vince does a great job every Monday. He puts out a video and it's a market update. And some people say, well, why do you have to do a market update every week? That's how quickly things are changing around. You could almost do one almost every day. That might be a little excessive. So, but him doing that every week is really appropriate now because we are seeing some shifts back and forth. Again, interest rates factor into it, time of year. We're in election year. People always get a little hesitant for some, around election years. Does that usually change anything? No, but yeah, I'm not going to tell people that are nervous about it to do something. So those are different things that you really just got to, again, Vince said it really well when he asked the question earlier about just taking the emotion out of it and just trying to speak factually about what's going on right now.
Yeah, and I think, Adam, to that question too, I think it comes down to timeline also, right? If a seller wants to sell quickly, they have to price competitively, right? If they're willing to sit on their house for 3 to 6 months, then they can maybe put it on the market for at that higher end, like Brad said. Hey, he gives 3 pricing structures: a high, medium, high, middle, and low. That if we're on the low side, we're going to probably drive more clients to come see that property. So I think it just depends on how quickly a seller wants to sell, and how much financial emotion is attached to that house. So I think back to what Brad was saying, there's multiple reasons a seller may price a little bit differently, and I think it's just their motivation more than anything else.
So
at the end of the day, Adam, I'll summarize it this way: as a seller, when you're getting ready to put your home in the market, and as an agent, when I come into your home, just have that mentality of, I'm going to deliver you the most accurate and up-to-date factual information as I can. And then if we're talking about right now, but you're not going to put the home on the market for 2 months, we're going to have a conversation right about the time we list it, and that number could change. So again, taking that emotion out and just we got to stay in the moment with the facts.
So I guess what I was trying to get at too, and like kind of pick at you, is like, people need to listen to you guys. Like, stop looking at Facebook and other things to figure out what their home is worth, and if they stop thinking that you can get a price that you could have got 60, 90 a year ago, whatever that looks like. When you're listing a house, you really do need to listen to the experts, which is you two, to figure out what that value is, because it does change all the time. I think I was just it's so weird to look back a year ago what was happening in the 450 price points people were spending, and they were buying the house and then putting another $20,000 down. That has completely changed now, which is interesting to me. Where that house is, like, to your point, Brad, might sit a little longer. So I guess I wanted to hear from you guys, but I think for anybody maybe watching this, is just listen to the professionals on what that house might be worth, because it does change all the time.
Yeah, it's good summary for today's podcast here is listen to your professional, whether for your loan documents, and listen to your agent when pricing your home.
Right. And I'm gonna use something that Brad has said in the past. You're not going to hire an electrician to maybe put a new roof on your house. You're not going to hire, a swim coach to come do the plumbing in your house, right? You're going to hire the professional that is trained in that field, and it has the knowledge for that field. So yeah, I think it's a good tie into everything we've been talking about and sharing on our weekly podcast. So yeah.
Cool.
Awesome.
And knowledge is power, guys. So that's our goal out here, is to give you guys more knowledge in the real estate and mortgage field, so that you're more comfortable and you have a trusted source when it comes down to things, so we can help you. Be sure to follow our YouTube videos, Facebook, Instagram. Reach out to us on the web. We're here to help. Vince Duvall with Eagle Homes, with Brad Brewer, and then Adam Zeman with the Adam Zeman Mortgage Team. Thank you, everyone. You guys have a great week. We'll be back next week, 9 a.m., same time, same bad channel.
All right. Thanks.
See you guys.
Have a great week. Thank you.
All right. Bye, guys.